Africa's 100 billion infrastructure gap has in the past 2 years been a center of debate. And at the Africa Stock Exchanges Association conference, many actors and stakeholders across the continent deliberated on means of diversifying infrastructure instruments across Africa and Africa's bosses. Hubert Danso, CEO of Invest Africa, shared insights.
I think the bourses are very relevant to the real economy because they bring two critical buyer and seller constituencies together. But I think the relevance is going to be undermined by the level of technological disruption in the market unless we build an ecosystem that engages the regulators, the exchanges and the companies to really think about what's the next 20 to 30 years of practical requirements required for the exchanges to become more liquid, easier access to capital, and just a bit more of an innovative employment of the new technology that's out there. Fintech is moving at an amazing pace. What's that really mean in terms of the way that exchanges can function, the way that the regulatory environment is established? And I think that's a critical issue that's been addressed here today. And I think when you talk about new and key opportunities, we've seen in the past, some of the greatest mineral wealth exist in the continent, as we all know. But the most of the mineral investment and resource-based investment is taken offshore to exchanges in Canada and Australia. We run a risk of that happening to our energy assets, where we've got serious, lack of access to energy. We've got billions of dollars going into energy-related investments. Private sector project developers are developing some very innovative and affordable and game-changing technologies, but they're getting their money offshore. I think it's a unique opportunity for the exchanges to innovate and create some kind of platforms and opportunities for infrastructure and energy-related assets in particular.
Listening to you talk earlier on, you're very keen on infrastructure funds and ways to actually involve infrastructure on the bosses, to say the least. Going forward, how can we make sure, if at all SMEs and ordinary companies are not listing, how do we make sure that many of these vehicles and instruments are on the bosses, if at all companies are not listing?
Well, I think the issue is you've got to understand your client. And you've got to know what you're selling to them, and it's got to be affordable, and it's got to add value to them. Currently, it's fair to say that a lot of the architecture for the exchanges have been designed with a one-size-fits-all almost, so that the standard for an SME it could be onerous because they have a very different complex and a very different setup to some of the larger companies that get bigger benefits. So first of all, I think we've got to take 2 or 3 steps back and really better understand the needs of the small and medium-sized enterprises. And I think it's that old adage about, an exchange can learn something from an SME because they are innovating and surviving and being extremely entrepreneurial each and every day. And that's the nature of the market that the exchanges are operating in. Don't forget, a number of the exchanges in Africa now are actually listing on their own exchanges. So they have to think in a very sort of private sector, market-oriented fashion. And I think sometimes that gets lost when you've got all of the responsibilities of almost being in a monopolistic market that's early stage. And I just think we need to throw away some of the old perceptions about what we must do and how we must sort of keep up with the rest of the world and just say, what works in our market? Don't forget, M-Pesa is now a global phenomenon. And it started to solve a problem in Kenya around finance at a level that the banks had overlooked for a very, very long time. And it came from a cell phone company. This level of innovation, the exchanges have a great opportunity to create that new marketplace that really crowds in retail investors and SMEs. Because we have the sort of lowest levels of GDP to capital market development in the world, unfortunately. But therein lies an opportunity because we also have the largest amount of SME companies that have the prospects to grow. And that is a perfect marriage. So we've just really got to say to ourselves, how do we look at this as a unique situation and right-size the regulation, smart regulation, and really see ourselves as the enablers to drive and build that community?
Right. Through one of the panels, there was a very interesting discussion on short selling and how come short selling is not actually very big on many of our bosses here. And one of the panelists actually did point out the fact that you cannot have short selling if at all liquidity is still below par to to put it very plainly. Now, this takes us to the obvious question of how do we raise more liquidity across the continent? And of course, who better to ask than the gentleman who is at the forefront of Invest in Africa?
Well, I think in terms of liquidity, you've got to have a proposition that investors know that they can participate in, and they know that they can exit. And it's always this chicken or egg situation. Our view is that we need to create an environment where, you know, listing is an attractive and competitive proposition. So I think, you know, a great deal of effort needs to be put into that. But I think there's a real trick that we're missing. We've got, you know, an increasingly vibrant, although it didn't have a great year this year, but it's still growing, private equity community. Now, you see most of the exits from the private equity community being on a private basis and not through the capital markets. So I think we need to make that connection, because ultimately the liquidity that's available on the stock exchange should be attractive and is probably at a premium to most private sales that, you know, a lot of the private equity community exit. So I think that's, you know, an absolute big tick in the box, no-brainer. You know, the capital markets community, the regulators need to figure out how can we create a win-win scenario for private equity exits in Africa in volume with the capital markets. Now, the problem is that on a regulatory basis, there are a few barriers to that.